Hi guys, welcome to the Trading Secrets YouTube channel. Today I want to tell you a story about the time I blew up my account. I think it only happened once, if I can recall correctly. I think I took some really bad losses along the way, but the only time I ever blew up my account was, I think it was somewhere early in 2014 or late 2013. I was working in a prop trading office of asset managers in Durbanville, and these guys did not really believe in a couple of the very basic trading safety guidelines, I should say. Sometimes they would trade completely against the trend. Other times they would trade or be in a position for a very long time without a stop loss. And the longer I was there, the longer I traded with these guys, the more I realized that they would tell you to take a trade, and then as soon as it's in the profit, they would say, okay, sell, because there's some profit to be banked. But if there's a loss, they would sit on that loss for a long time. And I figured out after a while that the reason why they wanted to close profits that quickly is they made a killing every time a trade happened. Every time you bought or sold 10,000 of a stock, they would make a decent brokerage fee off you. And that's one of the reasons why I don't trade stocks. It's expensive. So stock indices or stock index futures, to be specific, work very well for me. And the day in question was actually what happened was with regards to the stock index future on the South African top 40 index. We used to go in quite early in the morning. The market opened at 8:30, so we'd typically be there at around 6 a.m. and then do some market analysis, see where some of the key stocks closed on the Australian stock exchange or in the eastern stock markets, and also look at the previous evening late closing values for some of the mining stocks in the US. And then we dial into a couple of morning talks, morning meetings, shows where they just, some of them were meetings and some of them were like broadcasted shows where they would talk about what's going on in the markets, what to expect, etc. And the specific day that I'm telling you about now, there was this run-up of the market to very close to an all-time high. And the more we did our analysis and spoke to everyone in the morning, the more we developed a bias. And we all sort of started thinking, but hey, hold on, there's going to be massive resistance at the all-time high level. It's a very good opportunity to go short. I think the market did do this a bit in the previous while, so no one was really expecting it to break out and run off. So everyone started thinking, okay, let's go short. Another thing that was kind of strange is the brokers we still used to phone them in those days to trade these futures. They didn't expect us always to have the correct amount of margin on account, etc. And sometimes they would bend the rules a little bit there, which was also not a great idea. But I guess if you get into situations like that, that's where you learn the keenest lessons. And this day, as the market approached the highs, I shorted. I phoned my broker and I think I went 5 full contracts short, and then it went to the all-time high, which was not too far from my entry. And then as it went over, it didn't really look like it was slowing down just yet, and I sat there petrified for a while, and then I phoned the broker and I shorted 5 more. Now at this stage I shouldn't have been allowed to short 5 more because I didn't have any money left really for margin, but still they opened the trade in my name. And the market just kept on running, and it showed no signs of stopping. And after, I don't know, an hour or two of real terror, I decided to phone them and say, just close it. I now owed them money because they didn't do a margin call and just close my positions for me. They allowed it to run into the negative. But yeah, that's the story that I wanted to share with you today, and to share the lesson of the story with you. One of the most dangerous things you can do in trading is to approach the market with a bias. I think after that happened, I decided that I must go back to my roots. I don't know if you recall, but in a previous video I told you about when I started trading or started getting real interested in trading, I picked up a book called Trend Following. And after this incident, I thought back long and hard about that book, and it was almost a turning point for me in the sense that I decided if you can find a wise way to follow the market where it wants to move, then you'll be okay. If this day went slightly different, and if I said, look, the market is running up and it's looking strong, it looks like it wants to run up some more, go with it, it would have been a completely different outcome. So that day I decided I will not trade with a bias ever again. I'm going to follow the market where it wants to go. I think someone somewhere said, if you want to dance with the market, it's best to let her lead. And that's what I decided to do. And that's when I really discovered the trend level price approach that I use in almost all my trading systems to some degree or another. I mean, in some instances I use all three of those conditions, and some I use two. And in very fast trend changing conditions, I might only even look at the price action component. But the moral of the story is, don't trade against the market trend, and don't trade with the buyers. Both you and your account will get hurt. Thanks for watching, guys. I'll chat to you soon.